Mastering personal finance in the United States is not about becoming rich overnight, but about learning how to stay calm, confident, and in control of your money for the rest of your life. Most people earn money every month, but still feel anxious because they never learned how to manage that money in a simple and structured way. When you master personal finance, you stop reacting to money problems and start making intentional decisions that protect your future. This journey does not require a high income, a finance degree, or perfect discipline, because it only requires understanding a few core principles and applying them consistently over time. The first thing you must understand is that personal finance is not about numbers alone, but about behavior habits and long-term thinking. In the USA, people are surrounded by credit cards, loans, advertisements, and social pressure, which makes spending easy and saving difficult if there is no clear plan. To truly master personal finance, you must first decide that your money will work for you instead of controlling your emotions and decisions. The foundation of mastering personal finance starts with clarity, because you cannot improve something you do not clearly understand. You need to know exactly how much money you earn after taxes and how much money you spend every month without guessing or assuming. This clarity comes from tracking your income and expenses honestly, even if the numbers make you uncomfortable at first. When you track your money for the first time, you may realize that small daily spending habits are silently destroying your ability to build wealth. This realization is not meant to create guilt, but to create awareness, because awareness is the first real step toward financial mastery. Once you clearly see where your money is going, you can begin creating a plan that aligns your spending with your values and long-term goals. A budget is not a restriction or a punishment, but a personal spending plan that tells your money where to go instead of wondering where it went. In the USA, a simple budget that works well for most people is one that prioritizes needs, savings, and future growth before lifestyle spending. Mastering personal finance means learning to spend intentionally instead of emotionally, especially during moments of stress, boredom, or comparison. When you give every dollar a purpose, you remove uncertainty and replace it with confidence and direction. One of the most important steps in mastering personal finance is building a strong emergency fund that protects you from unexpected life events. An emergency fund is not an investment, and it is not meant to grow quickly, but it is meant to provide safety, stability, and peace of mind. In the United States, where job changes, medical expenses, and car repairs are common, an emergency fund prevents small problems from becoming financial disasters. Mastery begins when you can handle surprises without panic, because panic leads to debt, and debt slows down every financial goal. Once you have a basic emergency fund, you gain the ability to make better decisions because you are no longer operating from fear. Another major part of mastering personal finance in the USA is understanding and controlling credit instead of being controlled by it. Credit is a powerful tool that can either help you build wealth or trap you in years of high interest payments, depending on how you use it. A strong credit score lowers your cost of living by reducing interest rates, insurance premiums, and even housing barriers. Mastering credit means paying every bill on time, keeping balances low, and using credit cards only as tools, not as extra income. When you stop carrying high-interest debt, you free up cash flow that can be used for saving, investing, and personal growth. Getting out of bad debt is one of the fastest ways to feel progress in your financial life, because it immediately increases your monthly breathing room. Mastery does not mean avoiding all debt, but it does mean eliminating debt that works against you instead of for you. Saving money consistently is another key skill in mastering personal finance, because savings create options, and options create freedom. Saving is not about how much you save at once, but about building the habit of paying yourself first from every paycheck. In the USA, separating savings into different accounts for different goals helps reduce temptation and increases long-term consistency. As your savings habit becomes stable, you can begin focusing on investing, which is how wealth is built slowly and reliably over time. Investing is not gambling, and it is not about timing the market, but about staying invested for long periods and letting compound growth work. For most people in the United States, mastering investing starts with simple index funds, retirement accounts, and long-term thinking. Using employer-sponsored retirement plans and individual retirement accounts allows your money to grow with tax advantages that accelerate progress. Mastery means understanding that boring, consistent investing usually outperforms emotional, risky decisions over decades. One of the biggest differences between people who struggle financially and people who master personal finance is automation. Automation removes emotion, forgetfulness, and excuses by allowing your money to move according to a system you designed in advance. When savings, investing, and bills are automated, you reduce mistakes and increase consistency without relying on motivation. Protecting your financial life is also a critical part of mastery, because one unexpected event can undo years of progress. Health insurance, auto insurance, renters insurance, and life insurance, when needed, are not optional expenses, but protective tools. Mastering personal finance means preparing for worst-case scenarios so that best-case plans stay intact. Understanding basic taxes and using tax-advantaged accounts legally and correctly helps you keep more of what you earn. Another important aspect of mastering personal finance is controlling lifestyle inflation, which quietly destroys wealth as income increases. When you earn more money but spend more money, you stay in the same financial position with higher stress and bigger obligations. True mastery means increasing savings and investments faster than lifestyle upgrades. Comparison is one of the biggest enemies of financial peace, especially in a world of social media and visible consumption. Mastering personal finance requires focusing on your own goals instead of trying to match someone else's lifestyle. Wealth grows quietly and often invisibly, while financial stress is usually loud and visible. Patience is a skill that separates people who master money from people who chase quick wins and suffer long-term losses. Mastery is built through small decisions repeated consistently over many years, not through one lucky moment. When you master personal finance, you gain the ability to say no to things that do not align with your future. You also gain the confidence to say yes to opportunities without fear, because your foundation is strong. Mastering personal finance does not mean never enjoying life, but it does mean enjoying life without financial anxiety. The ultimate reward of mastering personal finance is freedom, which includes freedom of choice, freedom of time, and freedom of mind. This freedom allows you to make decisions based on values instead of survival. You do not need to master everything at once because mastery is built step by step through progress, not perfection. If you focus on clarity, budgeting, saving, debt control, investing, automation, and protection, you will naturally move toward financial mastery. The most important step is starting today, because time is the most powerful asset you have. When you take control of your money, your future becomes predictable, stable, and flexible. Mastering personal finance is a lifelong skill that pays you back every single day. If you begin now and stay consistent, your future self will thank you for every simple decision you made today.